Hello, and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners redomesticate out of volatile legal and tax environments like Connecticut to predictable pro entrepreneurship, pro growth states like Florida and Texas. Today, we are discussing how to move your existing LLC or corporation out of Connecticut to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications spanning accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Connecticut ranks number 47 on the Tax Foundation's 2026 State Tax Competitiveness Index. That is not the Hall of Fame, that is the Hall of Shame. Only California, New Jersey, and New York rank worse. Connecticut has held a bottom 10 position for 11 consecutive years running. It ranks 46th worst on individual income taxes, 49th worst for property taxes, and performs poorly on corporate taxes as well. The only category where Connecticut is competitive is sales tax, where it ranks as number 19, merely being mediocre instead of abjectly terrible. Every other component of the state's tax code is among the worst in the country. The individual income tax rate appears at first blush to be moderate. Connecticut has 7 brackets with a top marginal rate of just a hair under 7%. But the rate is not what it appears. Connecticut imposes an income recapture provision that eliminates the benefit of lower tax brackets for higher income taxpayers, effectively taxing all the income of a taxpayer at the taxpayer's highest marginal rate. A graduated system is supposed to tax only the income in each bracket at the rate assigned to that bracket. Not so in Connecticut. Connecticut's recapture provision overrides that structure. If you earn enough to reach the top tax bracket, you may be taxed at the full 6.99% on everything, not just the income above the threshold. And the brackets are not indexed for inflation, meaning more taxpayers are pushed into higher brackets every year, even as they lose real purchasing power. The corporate income tax rate in Connecticut is 7.5%, but that is just the baseline. Connecticut imposes a 10% surtax on businesses with gross proceeds of $100 million or more, or those filing as part of a combined unitary group, which includes more small businesses than you may realize. That surtax was supposed to be temporary. It has now been extended and is scheduled to expire January 1, 2029. Temporary taxes in Connecticut have a pattern of becoming permanent. The state does not comply with federal bonus depreciation treatment, requiring businesses to add back first-year capital investment deductions taken at the federal level. A minimum tax is also imposed on corporations' capital stock, though that tax may be scheduled for elimination. Connecticut's property tax burden ranks as number 49 in the nation. Again, high numbers being bad, low numbers being good. Second only to Vermont. State and local tax collections per capita are $9,718, the 4th highest in the country, behind the District of Columbia, New York, and California. State and local debt per capita is $12,589. You do the math, those numbers do not balance. And the funded ratio of public pensions is an abysmal 64%, one of the worst in the nation. A 64% funded ratio means that for every dollar Connecticut owes in future pension obligations, it has only 64 cents on hand. The remaining 36 cents must come from somewhere. That somewhere is future revenue, which means future taxes. Connecticut also imposes an estate tax, which is particularly unfavorable, making the state less attractive for high net worth individuals and business owners engaged in succession planning. Now, contrast all of that with Florida. Florida imposes no state level personal income tax. Similarly, Texas imposes no state level personal income tax. Neither state imposes a state level estate tax, a recapture provision, a corporate surtax, or a capital stock tax. Florida's corporate income tax rate of 5.5% applies only to income exceeding $50,000 and applies only to corporations. Most businesses in Florida do not pay income tax at the business entity level. Do not get confused. Texas similarly does not impose a corporate income tax, but does impose something called a franchise tax. However, that does not apply to businesses earning below $2.47 million in annualized total revenue. The result being that most small and medium-sized businesses in Texas do not pay entity tax at the state level either. To put that in perspective, on $500,000 of pass-through income, the difference between 7% in Connecticut and 0 in Florida or Texas is almost $35,000 per year. Over 10 years, that's almost $350,000 before accounting for the property tax differential and the estate tax exposure, not to mention the return you could earn on the savings. Redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering a federal income tax, but only when performed in strict conformity with the formalities of the Federal Internal Revenue Code, Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Contrast that with foreign entity registration. Foreign entity registration, also referred to as foreign qualification, among other terms, does not change the company's domicile. Actually, it keeps the entity in Connecticut and merely adds a second state of compliance. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new entity and can trigger serious tax consequences. Finally, dissolution is really not an option at all. Dissolution should not enter the conversation. I like to tell prospective clients that dissolution is the legal equivalent of burning down your house to move to a new neighborhood. Redomestication, when paired with a change of personal residency and that's an important and, a reduction or cessation of business operations in Connecticut, can reduce or even eliminate state tax exposure for the entity and its owners. To recap, Connecticut has ranked in the bottom four for 11 consecutive years. The pension liability is only 64% funded. The corporate surtax was supposed to be temporary. It's not. The recapture provision at the individual level taxes all your income at the highest rate for many taxpayers. Nothing about this trajectory suggests improvement. I have personally assisted a number of companies and their owners redomesticate out of Connecticut with a 100% success rate to date. If someone is telling you it's impossible to redomesticate an entity out of Connecticut, I encourage you to seek a second, more informed opinion from knowledgeable legal counsel. If you have questions regarding potentially redomesticating your existing limited liability company or corporation, please use the link in the description for more information on this legal process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is necessarily general in nature and is not legal advice, because legal advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.